Welcome to Custom Home Builder Solutions, a web-based software, also known as CHS, a standalone accounting suite focused on job costing and profit management for professional home builders.
Hi there, this is Carol King, the developer of Custom Home Builder Solutions, also known as CHS. It is basically known as a job costing, a full accounting software. It is called Custom Home Builder Solutions because it has been specifically tailored for custom home builders and all of their various unique needs. But because it is a fully fledged accounting program, let's just see what else it can do. It can do more than handle custom home building. And in this video, I'd like to talk about how it can handle property management for rental properties that you may own. If you own rental properties, you can include them on your chart of accounts, and I'll show how to set up the accounts that you need for property management. You can set up a department for property management. Then you can set up those rental properties as jobs and set up rental receivable invoices and copy them each month to send out to the renters. By setting up the jobs and the departments, you can track cash flow for each of the properties or for the entire property management department, and you can produce financial statements, little income statements for each property or for the entire property management department. So let's get busy showing you how to set up your chart of accounts to do that and some of the other things, and we'll demonstrate the financial statements that are a result of all of it. So the first thing you'll need to do to get prepared for handling rental properties is that you'll need to add some accounts to your chart of accounts. So let's go there and take a look at our chart of accounts. Let's scroll down to Properties, Plant, and Equipment. So we purchased 2 rental properties, and I have set up an account under Property, Plant, and Equipment for rental properties purchased. And we purchased 2 properties for cash. So if I drill down on that, you can see the 2 properties. You can see they've been assigned a job code, which helps us do little financial statements and keeps track of everything by property. But we paid cash for these properties, and we did a journal entry. And if you want to take a look at the journal entry that we did for the 2 properties where we're taking it out of cash and putting it into purchase. You could have also written a check and done this out of accounts payable and had the same basic bottom line result. So we have 2 properties here that are probably going to need to be depreciated when you have rental properties, but we'll get to that in a second. I also added an account called Rental Properties Improvements, and if I drill down on that to see what I've already entered there, is apparently we added a roof to the property for PM Bolden, and we added it by writing a check in accounts payable, and we added it to improvements. So we will be depreciating both of those. So speaking of depreciation, I also added an account under accumulated depreciation for accumulated depreciation rental property. And at the end of the year 2016, which is the year we're demonstrating for you, even though this video is done in 2021, we did a couple of depreciation entries for each property based on what our accountant told us to do, or if we just know how to do our own depreciation. And if you drill down on one of the journal entries for this, you'll see both of those. We're doing both of those. That one side is into the accumulated depreciation, and I'll show you where I set up another account for the other side of it, which is the depreciation expense for rental properties. The ins and outs that you do for your depreciation entries. Now let's scroll down. Let's look at current liabilities. I also set up an account under current liabilities called Rental Property Security Deposits because we took a couple of security deposits, and those are considered liabilities because you might be giving those back to the tenant when they move out, or if you don't give them back for whatever reason, you probably move them out of security deposits and into rental income once they leave the property or your lease is finished, etc. You can talk to your accountant again about that. Now under long-term liabilities, we did not finance these 2 properties in our example, but if you did, you might have a mortgage notes payable for rentals. In the case of mortgages, sometimes you do set up individual accounts for each mortgage so that you can track the balances really easily for each mortgage. So you might have mortgage note dash Bolden property, something like that. But we're not doing financing in this. You have some other things that become involved. If you're paying for interest on the rental properties, you might have an interest expense for them, and might be keeping track of an escrow and your assets for them, etc., which gets way more complicated than we want to do right now. But you should have your accountant help you if you're making monthly mortgage payments on your rental properties. So also down here under the big section, sales and revenues, I actually added a group section. So far I didn't have to add a group section up there, but I added a group called rental income, and you do that up here under edit financial groups. And please watch our setup videos about chart of accounts. But you can see that down here I added a group into the big financial section for sales revenue. I added a group called rental income. This isn't your account on your chart of accounts. This is a grouping that you're putting in, and you're basically telling it what order you want those groups to be on financial statements. That's more than we want to go into right now, but I added a group for rental income, and so we'll go down here and take a look at that. And you can see that group rental income, and we've received rental income basically for the months of March, April, May, June, and if we were all the way at the end of the year, like the depreciation entry represents, we would have had July, August, but this is a demo thing. It takes me too long to add them in. But you can see how we're doing accounts receivable invoices for those, and we will go over and demonstrate how you're doing those invoices. But this is all the income for the two properties for about 4 months there. Also, I added one called rental utilities revenue, because on one of the properties we're going to charge the tenant for the utilities, and I would like to track how much we received for the utilities and then how much we paid out. So that brings us to cost of sales. And under cost of sales, the big financial section, I added another group called cost of sales rental expense. And I named one rental maintenance, just to hold anything if you go and fix things like the plumbing or the toilets or the whatever at the property. And I added one called rental utilities that we're putting in when we pay the city for some utilities for that property, that one property where we're also then charging, where we're paying the rental utilities. I put some others here, property taxes, rentals, property insurance, because you'll probably have that you're paying every year that you could put to rental expense. And if you were financing it, here's one that you might be using for the interest and financing expense of the portion of your mortgage payment that is interest. Now I have one more thing that comes into play way down here. And under depreciation expenses, remember we did accumulated depreciation for rentals, but every time you do that, you have another entry in your expense for depreciation expense. So I added one in here. This is the other side of the journal entries I was showing you that you made to do your depreciation. So that's basically what I set up on the chart of accounts to handle all of this. The other thing you need to do right away up front is set up a department for property management so that we can do little financial statements for our entire property management and see how much we're making in that section of our business. So I added one that has an ID of PM and named it property management. You just use the add new department and put it in here. And you'll see how we'll be using that as we go through doing a little bit of the accounting for property management. Now let's take a look at the power of using a job costing program to track rental properties and get little financial statements, etc., for each property to see what you make on each one. So let's close the section for chart of accounts and let's set up a couple of jobs for those properties. And you do that by going to the jobs list and setup. I set up 2 jobs that began with PM just to keep them all in one place. So let's click the P here, and you'll see that I have 2 jobs set up here for that. And I'll drill down to edit. If you need to add the new job, you'll give it a code like I did, PM Bolden and PM Gibson. Those are the street names you can see over here for those 2 properties. That's how I decided to handle it, so that I could always have the property managements together in the job code field. So you could add a new job to do that, but I did that already, and once you add the new job, this screen that I'm clicking the edit button for will open, and I'd like us to just look at a couple of things about that. First of all, there's the job code, and I typed in rental as the type. If you are setting up the second one after you did that, rental will be in the drop-down list, but you can just type one in and then it'll remember it next time. And then I selected the PM department that I told you about to have this relate to that. So when I select this job to either enter an expense or to do an accounts receivable, the department will automatically drop in. This here is called Job Cost GL because we are a custom home builder, etc. And a GL is the account on your chart of accounts that you'd like most any expenses to be posted to for this particular property. So I just decided to set a default of rental maintenance so that if I was entering something to a vendor in accounts payable, this 3676 GL account would drop in for me. Now you need to pay close attention because maybe one time you're paying for the utilities and you would like it to go to utilities. So when this drops in, because I selected this job, you need to pay attention as you're entering your accounts payable bills to the general ledger account number that dropped in, and you can change it real easily. But because I put this one in, when I drop down and it drops into the accounts payable, it'll be real close to the other account I want that time. So it's a default is all this is saying I mostly want this stuff to go here. Now I did this over here and set up a subdivision by using this button called rentals, just because if I wanted, you can do some statements that ask for everything in a certain subdivision also, but that's not necessary for a rental property. Most of the rest of this is not really applicable to a rental property, so we'll just jump right past that. But I did set this property as closed. It's not one that we're building, so we want to just put it as closed, but we want to leave the job closing posted as unposted, so CHS won't start warning us this job is closed. As long as this says unposted, then it won't be warning you about that, because that's not applicable to a rental property either. It's not a home you're building, but I did those two things. I did closed just so it wouldn't show up on active open jobs that I'm looking at that I'm building. A very important part of setting up a job for a renter is that you attach your renter to the job. So we're going to use the section called buyer, but you can think of it as payer. And in CHS, all people that pay money to you are considered payers. Since this is tailored for custom home builders, it's called buyer right here, but now we're going to think of it as the tenant for this particular property. There's an important reason for attaching this particular tenant to this job, because when you start an accounts receivable invoice or you post a deposit and you select this particular payor, since we're attaching it to this job, the job and the department will drop in for us. So we'd like to get that attached here. So you can set up a new, basically, payer by clicking this button, which I've already done, and we can look at the setup of that payer by using the other button to edit it. So what we did was set up a payer ID for the name of the tenant, which is David Rollins, in that property, and we added a payer type by using that plus button called renter. You could call it tenant or whatever you like. You use this add new payer type and add a type that you'd like to use, and then you can select it. That way, when you're doing accounts receivable invoices, etc., you can just look for ones for renter if you want, by payer type when you're doing receivables, and some various other reports. I also over here put a note, renter 2000 Bolden Street, and I put this as their address and their various phone numbers. So I close that, and then once I've set up the new buyer, I need to select them right here in the drop-down list, and I do need to type in first and last name. If it's David and Lisa, you could type that here because it's just something that gets supplied in various job reports. So that's very important that you attach your tenant. Then when you get a new tenant, you should open this job, this property management job, and change out the tenant right here. So you can just keep doing that. It doesn't hurt to do that. The main reason, again, is so that when you select this particular payer, it will know what job it's connected to, which makes your life a whole lot easier. So I've closed the job setup and the jobs list, and now I'd like to show you doing receivables invoices for the rent each month. So let's go over here to Payers, Deposits, Receivables, and we'll select Accounts Receivable. What I'd like to show you first of all is that you could add a new receivables invoice, which is not going to be what we're going to do. We're going to use this feature down here to start copying invoices, which is really handy for those kinds of recurring things like rental invoices. But let's just take a quick look here if I just was starting from scratch for a rental invoice. Once I select the payer, here's that payer, Dave Rollins. And what you'll notice is that the job, because I attached this payer to that job I just did, and the job has a department of PM, that dropped in. So when I create a new AR invoice, the job and the department will already be there for me. Now I'm not going to do that right here because the screen where we're going to copy from will actually open the same kind of screen that you're going to get when you add a new receivables invoice. Just don't want to take up too much time here. So what I want to do is do review, edit, copy AR entries. Now the first thing I might like to do with this big database of all my accounts receivable is do a search. And remember how we set up a payer type of renter? And I said it would be very handy for searching for things or for looking for things. Let's select renter over here under payer types and then submit the search. Now all we have here are things for our two renters. First of all, here's the payer Dan Green, which is attached actually to our PM Gibson job. And then down here you all of a sudden see David Rollins. And you can see the various, it's grouped by invoices. You can see that David Rollins, when we initially did David Rollins, we also got a security deposit. So this invoice had the rent, had the security deposit, and then had a minus for the security deposit, a minus here because we also posted the deposit, so that this invoice is now 0. And if we keep going down, we'll see that all of these, we had some little invoice we gave to Dave Rollins for some reimbursement of office supplies, and since he's marked as a renter, it's showing up here too. But you can see that all of these have been paid, that we received a deposit, and I'll show you that. But also by looking at it, you can see that you've done, by looking at the dates over here, we've done for Rollins, for example, March, April, May, and June. And the same thing for our Gibson Street renter. We've done March, April, May, and June. So probably what you're going to want to do July, actually, would be to copy, say, this invoice. This particular renter is getting charged for utilities every month, and we kind of bumped it. We give them a sort of flat amount, but we bumped it up. So if we copy this invoice, we're going to get these two lines, not the deposit line, of course. So I'm going to do copy. And notice how it's filled everything in for me, except that I need to remember about the date. I'm actually doing this in the year 2021, so it dropped in today's date. But we want to do one for July 2016. Let's play like we're in that year, and it's warning me that I'm doing something way outside of my current period, but I'm not going to worry about that. It lets me do it based on how I've set up my current period. And it's showing what invoice to copy from so that I could just review that invoice if I wanted to be sure it's what I want to copy. That's just why that link is here. But if now I create a new AR invoice from this invoice, says a new invoice has been created and that a window will open so that I can edit things. Now notice it's put the date in it, it's done the rental income GL number right here, and it copied the brief description, which I made sort of generic so I could use it every month. And it's also put in the rental utilities revenue of $175. What I can do is change any of this, or delete a line, or copy a line to add a new line, or just add a new blank line to do something else I might be wanting to charge them for this month. If I'm wanting to give them a copy of something, like maybe the rental utilities invoice, I could do that as an attachment and it would show up on their statements, etc. But I'm not going to do that or take the time to do that. But what I'd like you to notice is that until you make some little change to it, whatever it is, this submit won't be active. Well, the change we would make would be July 2016 rent. And it's ready to go. Let's submit it. Said it has been posted, and that we would need to refresh because all the records would come back. But we could also just resubmit our cert, and we could go down and see that we now have a July invoice for that Gibson property, and we can do the other one just as quickly. Just copy. It's already dropped in all these things. Create new AR invoice. It's telling me it's copied one, and a window to edit it will open. and we'll make one tiny change. Notice this is dim until we change something. That's just the way it is on the web. It's due July 2016, and of course you need to change your date. Don't forget that, because it's just going to drop in today's date because it doesn't know what to do with that. So now let's submit our AR invoice, and we have one for that renter down here too, and let's resubmit our search. And we now see that we have a July one down here for $1,200 for rent. So that's how that happens. Pretty quickly you can start copying your invoices. What I'd like to show you is that over here, before you print invoices, you can set up a style of invoice. And I have set up a style called rental invoices. And I'll take a look at the rental invoices style. On their invoices, it knows this is the rental, and it tells it when it's due by and what the late fee will be, and that will be on those invoices. So if I close that and I've selected this style, so we are going to look for any invoices dated after June 30th, 2016, and we selected a payer type of renter, and we're going to print the invoices. And you can see this one also printed because it's an open invoice. But let's go ahead and export this to PDF because it opens as a quick HTML view, which it doesn't have them separated by pages. And if we do want to print those, we want to get it to a PDF. What I'd like you to notice once I get it to a PDF is that it's not giving page numbers. So that when you print these 3 different pages out, you can just take out the ones you want. This is throwing in an invoice which maybe you still want to go ahead and send to David Rollins because it hasn't been paid. This is just some demo stuff that I did, so just ignore it. But these 2 rental invoices, one that you want to send to David Rollins and one that you want to send to PM Gibson, are the ones that showed up for you for everything after June 30. So you can print these out and you'll have the different pages that you can put into the mail. So that's the rental invoices. But what I'd like, well, I closed the PDF, but what you can see here is that on each one it has stuff from that style that I selected about being due on the 3rd of the month and a late fee and that type of thing. I just wanted to show you how you can copy and make the new invoices if you have several properties, and then be sure you set up a style for rental invoices and then select everything after a certain date. If you did a whole bunch of them for July 1st or you dated them June 29th, you might want to select June 15th just to see everything after that, and then print the invoices and send them to a PDF. So let's play like we got the checks from the 2 renters and that we put them on the same deposit and took them to the bank. And let's post that deposit of both the checks. So let's add a new deposit. And what I'd like to show you is when I select Rollins, which is a renter, PM Bolden property dropped in, the PM department dropped in, and let's play like their check number is 14567. And since we did it in Accounts Receivable, we're going to look and see which one has a balance due, which would be this one. The rest are 0, which was the one we issued. And we can type in a description, July rent. So let's go over here and talk about the deposit category. You can set up various deposit categories when you're setting up CHS. You add new deposit category, but the purpose is to say, if I select this deposit category, what GL account do I want to have drop in? In this one for rents, we want the GL account for $32.50 to drop in if we had not done an accounts receivable invoice. If you do an accounts receivable invoice, CHS will not drop this in and will force the accounts receivable GL number to be right here because we actually got it over to rental income when we did the receivables invoice, sort of in an accrual method. But if you don't use receivables and they just pay you the rent and you want to go post the deposit, it can be real handy to select rents and have $32.50 drop in, which it did not because I selected an AR invoice, and CHS is smart enough to know, no, we don't want to have it show up in rental income twice because we did it in accounts receivable and then here. So it's forcing the GL number for accounts receivable just because we have an AR invoice selected. And it dropped in the amount for us when we selected the receivable. So let's do a second line, and let's do, I think it's Dan and Joan Green, the tenants for this property, PM Gibson, the other property. And we're going to do 789 for their check number. And the property and the department dropped in, so we'll do green, July rent. We'll select rents as the deposit category in case we're just doing any lists by deposit category. And since I did not select an accounts receivable invoice, the GL number 3250 dropped in. I just wanted you to see that, but let's go ahead and take care of their accounts receivable invoice. Notice how the GL number changed to 1210 for accounts receivable, but left a deposit category of rents, and it filled in the amount of their payment of that receivables invoice. And we're going to put this into our operating account. This is the total of the deposit we took to the bank. It was a total of 2 checks. And we'll play like we got that on July 2nd. They were maybe a day late or something. It does warn me, since I'm doing this in 2021, that I have entered a really old date in case you did that by accident. But I'm doing that on purpose. So we're good, and we're going to submit that deposit. Close that, go home, jump back to receivables just because we want to. Take a look at that accounts receivable again. Let's search just for those renters. You could also just search for the department PM if you wanted. Let's change this one to no selection, and let's just select PM. We want to see everything for property management, and we'll submit the search. And we're just seeing those renters again, March, April, May, June, and the July payment where the invoices total to 0. And the same for Rollins, the July payment that came in from the deposit journal. So that is all good. So the other big thing I want to show you is how we can see various financials for each department and for each of those jobs. So I'm going to go to financial statements, and I'm first of all going to look at balance sheets, trial balances, and I'll just use July 31st, 2016 just because it doesn't matter. And I'm going to select a PM job. Let's do the Bolden one. And let's look at the little trial balance for the job. First of all, we can tell that we've had this negative amount of cash contributed because of our purchase of the property, and because we did some improvements. And then we've received security deposits of this and rental income of this, but this is our little trial balance just for that job. Let's see what happens if we do the Gibson one. I believe it has the utilities in it. And you can see more going on: rental utilities revenue and rental utilities costs. So we're covering those costs by collecting from the tenant, it looks like. And you can see a cash flow for the job. Now this is an accounting cash flow that has sources and uses of cash. If you haven't paid, it looks like we haven't paid one of our utilities, accounts payable trade will be here as a source because we have not spent the cash yet. And the security deposit and current liabilities will be a source of cash, of course, because we did get that money. Rental income and rental utilities revenue is a source of cash. And you can see here rental utilities. The reason accounts payable for a utility bill is up here is because in this 605 total for rental utilities, that one is included when you do sources and uses of cash. It's just how it operates. And a use of cash is the purchase of the properties, and this is the net cash contributed for this job so far. Let's also look at the income statements. Let's just do 1 year. 01/01/2016, and let's just say we're looking at 7/31/2016 for whatever reason, and we can do the PM Gibson, and we can see it's called job income statement, and you can see that we've received this much rental income, this much rental utilities revenue, and this much rental utilities that we spent out. And so the net income, not the cash flow, just the net income on an income statement is this much for the year so far for that property. Now the other thing is that you can select a department. And so if we wanted to see the whole property management department and what income we're making on that on our income statement, we can see the whole thing. So all of these numbers include both of those properties. I guess I randomly threw in some telephone expense for rental properties one time doing a demo. I have no idea. So you see how handy that can be to actually see all of the ins and outs and be able to do it by department and by job, and the reason that a job costing program works out pretty well for being able to get the information for each property. I hope this is something you can use if you have properties, and thank you for watching.